The bull run's just starting today.
Yeah? You got price targets?
I mean, listen, we need this finish this week over 107.50, okay. 107.500. If we do, if Sunday night we're at 108, 109, you're going to be at 130 before you can bat an eye.
Mike Novogratz highlights a growing and urgent concern. The U.S. dollar's long-standing role as the world's reserve currency is facing real structural pressure. For nearly 80 years, the dollar has been a symbol of global trust, economic power, and stability. But today, that confidence is visibly eroding. According to Novogratz, this isn't just about rising debt levels or persistent inflation. It's something deeper. The very brand of the dollar, its reputation and perceived reliability on the world stage, is weakening. And in a world where perception drives reality, that shift could have profound consequences for U.S. influence in the global financial system. Hit that like button like it's the buy button during a flash dip. Fast, aggressive, and with no regrets.
The dollar as the reserve currency is under stress. It's hard to go around and tell the whole world they lied, cheated, and stole on you, and that they should come and kiss your ass or be your 51st state, and have them say, hey, let's keep more dollars. Right? And so we are debasing our dollar both in our brand, but also as an economic lever. And so when the dollar is selling off, other assets get more valuable by definition. And so you've got part short dollar in this. You've got part real worry about fiscal stability globally, right? Look at the Japanese long bond. It's on a free fall. Our long bond took out, 5% today. And so when people start losing faith in G10 bond markets, they got to put their money somewhere. And so gold, silver, broadly equities often, but commodities and now Bitcoin as digital gold, all fulfilling that role. Long bonds have sold off. There was an auction that didn't go well. As soon as that thing didn't go well, bonds sold off another 6-7%, took equities from up on the day to down on the day, took Bitcoin from up on the day to flat. The markets are nervous. Listen, I think from the time Larry Fink bought Bitcoin, up until then, we were all pushing this snowball up the hill.
Yeah.
And then it got to the top of the hill and it stayed there for a while, and now it started to roll downhill. And that snowball is adoption. It's the community orange pilling and pulling more people into the community. And Larry was like the big kahuna to orange pill, but now you've got sovereign wealth funds. You've got retail equity investors coming through all these MicroStrategy and MicroStrategy lookalike products. You've got normal retail. You've got normal institutions. It just feels like we are at escape velocity. Listen, we're going to have to close above and stay above 106, 107 for 3-4 days, but that'll open up 130, 150, and then you're in price discovery. And so why is it happening? A, adoption, and B, you look at what's going on in DC. We're not going to have a 3% budget deficit this year. We're going to have a higher than last year budget deficit, which was not in anyone's bingo card, right? I love Scott Bessent. I think he's doing a good job, but he was promising us 3%. I think I have a bet with Pump, 3% above, he owes me 1,000 push-ups, and 3% below, I owe him 1,000. And so that guy better start working out. The bull run's just starting today.
Yeah? You got price targets?
I mean, listen, we need this finish this week over 107.50, 107.500. If we do, if Sunday night we're at 108, 109, you're going to be at 130 before you can bat an eye. Gold is going higher because as central banks diversify, they're buying a lot of gold. And they're taking big chunks of gold off the market. That's mostly the BRICS central banks. They want to have less money in the United States than they used to. Right. And that's logical. And so you don't have central banks buying Bitcoin yet, right? You have some sovereign wealth funds dabbling in it, right? Abu Dhabi said they bought over $500 million worth. So that's not a dabble. That's a bite, but not $1 trillion reserves like you have in gold. We are much more legitimized today than we were. And the crypto community hates to hear this. What will really legitimize us is to go from being a casino to becoming a service provider. Like, again, I want to have crypto apps beyond buying and staking and selling an economic app on my phone. And like in the US, we don't even have payments. So you think about what crypto's contribution is so far to the common man. It's Bitcoin to store money in or other currencies that act like Bitcoin and stable coins overseas. cross-border payments are a big deal in Latin America with stablecoins. We've invested in 3 or 4 venture companies that are making lots of money doing it. So I'm not discounting what's gotten done, but we need the aha moment where everyday Americans say, hey, I got this. And we haven't had it yet. It might be tokenized equities. Even now, our markets aren't big enough to drive like the CEO of Bank of America to worry about it, right? What I think the first thing that will get everyone freaked out about is tokenized stocks. When you start seeing like their babies tokenized and trading and growing, then every asset manager say, what am I going to do? I got to go from like old school to new school. But I don't think it's going to be Bitcoin. Like Bitcoin, even if it keeps trading, okay, it'll be just like gold. They have gold on their desk. Gold is not a big part of anyone's business, right? Think about they all have a gold desk. All right. It's 1 out of 50 desks, right? And so it really has to go broader than just an asset. We've been the reserve asset a long time. Roughly people keep that title 80 years and we pushed our 80. You're the reserve currency of the world when you control the seas. Period. He who has the strongest navy is the reserve currency, traditionally. Now, the seas might not be as important anymore because we can transport shit lots of different ways. But if you provide safety and security to the world, if you have a legal system the world trusts, you become the reserve currency. And so we spend 3.5% of GDP on our military. It used to be 5% when most countries spent 0.5% to 1.5%. So it wasn't free to be the reserve currency, but it had huge benefits. And the Trump administration doesn't see that as clearly, right? Getting out of NATO or, by definition, weakening NATO, some of the economic agreements, the global network that got created after World War II, we are retreating from.
Novogratz warns that the proposed tariffs from the current administration could be a short-term inflationary disaster. He argues that tariffs function as tax hikes, raising costs for consumers and businesses, and slowing down trade. While they might serve some long-term strategic purpose in the immediate term, they reflect fiscal confusion and a lack of economic direction. Worse yet, the reaction from the bond market sends a troubling message. Investors are starting to doubt whether the government can repay its debts without resorting to money printing. According to Novogratz, that kind of signal points to deep instability in the system. Let's go back to the interview.
You're going to have to see more fiscal hawkishness, right? And so this package that they put out, we're cutting taxes on tips, cutting taxes on overtime, not raising taxes on anyone, and spending more on the military. The market's saying no, spend less.
So fiscal reform, spend less.
I think you've got to tighten fiscal. The Fed's in an awkward position because, if they're not going to raise rates, but this becomes inflationary. Like when the bond market is selling off, it's telling you you're worried about inflationary impulse, right? You might change the tariff. Like tariffs are short-term inflationary. There's absolutely no way around it. They're long-term, probably deflationary if they slow the economy, but short-term, they're inflationary. They are literally tax hikes. Mm-hmm. And so it's a very tricky mix. Your job as the Treasury Secretary, and quite frankly, your job as the president, is to instill confidence in American markets. And when the markets are falling like this, they're saying, we're getting less confident, right? When the dollar falls, it's saying we're getting less confident. I mean, just look at every Powell press conference. He does not want to go in and have to support the market. You're not going to see, Bessent might use his authority to go buy long bonds, but Powell's not coming in to say I'm buying long bonds because it's not his role. Right? Like this is self-inflicted by this administration. And I think you're going to see a bit of a Mexican standoff. If Powell thinks stability is at risk, if he thinks inflation is at risk and or jobs, he'll move. But he's got that dual mandate and a little bit of market stability. And so we'll see if the bond market's in free fall, I'm sure there'll be plenty of meetings and they'll try to come up with something. But roughly when the UK it happened, right, Liz Truss was gone.
Yeah.
Right? And so we don't have a parliamentary system where you can throw out the president, but we have a system where you can change the bill he's working on, right? You can change the tariff negotiation. Like no president in the history of America has beaten the bond market. The bond market is the 600-pound gorilla king of the ring. Liz Truss's government got elected. They came out with a really radical idea to help transform the British economy. And the bond market said, no. we will punish you. And she was out of a job literally in 3 weeks.
Like yield spiked, basically, right?
Yeah.
And like
Bonds
that
sold
kind
off,
of
yield spiked, and she lost her job.
Yeah, it's almost like
the bond market just threw her back up.
Exactly.
If the bond market, they used to call them the bond market vigilantes. If you're doing something wrong and no one wants to lend you money, you got to change what you're doing, because our whole government is based on borrowing money. And we've had the largest, debt in the history of the world. It accelerated a tremendous amount during Trump won and Biden won, right? We had bad debt before Trump won, but then it was already expanding, and then COVID happened, and both parties were like, oh, it's a party. Now, they had to do something, right, in a pandemic, but they did a lot more than they needed to, and now we're suffering from it. Yeah, listen, Trump is admirably trying to bring some manufacturing back, and we will bring some back, but it is the definition of insanity to think you're going to take 30 years of building supply chains overseas and snap your fingers and have them come back. Just period, end of story. Like, some of the stuff you can't even get, right? It's like, oh, I want to mine lithium here. Well, it's not here. It's over in other places, right? It's in Argentina and Chile, and supply chains, that are labor intensive. 30% is not enough. Think about this. To be in the top 1% of the world income earners, it's about 55K, right? That's our per capita. That's our median income. That means the median worker in America is a 1%er in the rest of the world. That's a big wage gap difference. And so, I don't know, 30% difference between a Vietnamese cost and an American, still not enough to move tennis shoe manufacturing back here to America, until you can do it all robotically, and that doesn't hire people anyway.
Novogratz ends with a stark warning. No U.S. president has ever defeated the bond market. It's the 600-pound gorilla in the room. If it turns against you, the only option is to change course. Both Trump and Biden oversaw massive debt expansions. While some of that was justified by COVID-related spending, much of it went too far. Now the consequences are catching up. Want more? Click this video next. It's a game changer.